You have been trading the market with very blind and then you don't know what is a logical thing. So it doesn't matter if you're a price action trader or maybe the smart money concept or maybe the ICT. So I will teach you the best possible strategy today in this video with a gold chart. So let's get into the video. Now I'm gonna just tell you the strategy. So which will be the, you know what? So a lot of guys trade the gold, right? So here we got this H4 power of 3, like 4-hour opening prices and 4-hour candles here, H4 candles. So our only, you know what, only goal is to trade the 4-hour candles with along the bias, right? So H4 candles are the only thing you can just really focus on. I'll be showing you a lot of examples there, so don't worry. So we got this open, like think about the power of 3, like open, low, high, and then close, right? So it doesn't matter if any candle like the H4, it's going to do its thing, right? The open, low, high, close, or maybe the open, high, low, close. You should be trading this like open, low, high, close, or open, high, low, close. That's it. So now you should be adding the things that I will tell you right now, right? The criteria to take the trade setup to trade the 1H4 power of 3, which will make you the 1:2 or 1:3 risk reward. So first of all, these are the entry criteria, like entry criteria. Sorry. So entry criteria. So we got this, the institutional out of flow, like the bullish or bearish, institutional out of flow, and high time frame key level, which will be the FEG. Sorry about that. High time frame key level, SMT, so which will be the correlated thing, right? The relative strength analysis. So now SMT and the stop hand and then cyst. So you should be combining everything with this 4-hour power of 3. So, and then the swing points. Don't worry, I'll show you examples on the charts, especially on the gold. So, and some indices charts. So these are the criteria that you need to focus on. Changing the strategy, the swing points here. So now I'll be, showing you the trade examples where I took in the live. As you can see on my Twitter page, they were MMXM, where I just posted the trade breakdowns. So first of all, you need to determine what's the high time frame narrative, high time frame bias. It's institutional order flow is actually bullish. You can already see that it creating the daily FEGs and then respecting this down close candles, right, for the higher prices. Yeah, this down close candle, this daily FEG. And then now, let's say this is a new week opening, like opening price. This is Monday, which means the new week has started around. It's a daily FEG, right? So let me just mark this daily FEG instead of this order block. So this is the daily fair value gap, which will be the POI that we can just use it, right? Yeah, this is the daily fair value gap. And then you can just mark the daily order block. So it doesn't matter. So now I'm going to go to the 4-hour chart to show you that how you can just position yourself into this trade idea. You can actually see that we have this nice dealing range where it just, dipped into. This is the daily fair value gap, remember that? And then I told you, right, the weekly opening price. So this will be the weekly opening price here. So weekly just opened up, created a low at discounted fair value gap, right? Which will be the daily fair value gap also, and then the 4-hour. So let me mark this 4-hour fair value gap. Now you gotta do this one thing, like internal to external. So the internal to external is nothing but the FEG to the old high or old low. So if it just dipped back into the internal range, it will just go to the external range. That's all. So now you gotta mark the 4-hour opening prices. Like, look at these candles here. You got this, 1, 2, 3. This is a swing point, which is a candle the swing point, right? The second candle, and the third candle just didn't create the low, and that's completely okay and normal. Now we got this closure, like it just inverts the fair value gap. We can see the 5 a.m. just opened up and created a low, and just placed to the draw liquidity, right? So now you gotta just focus on the H1 stop hunt, or maybe the FEGs, or maybe the M15. So let me go to the H1. So especially if you're trading the stocks, I'm going to introduce the best stock prop firm here. So it's a trade the pool. So you have the no PDT rule. So trade the pool offers you an ability to trade up with a 260K buying power and trustworthy and reliable firm. So make use of it. Link in the description. So you can see that we have this hourly fair value gap, right? So remember about the external to internal, internal to external, everything is just fractal, right? So you gotta just wait for the H1, FEG, or maybe the stop hunt, or maybe the M15. So with this opening price of this 4-hour candle, the 4-hour just opened up, created a low here, right? And then you can usually use the SMT. Maybe we have this SMT like this, let's say SMT like this, and then you can see that. So what's the low time frame for the 1 hour? It's a 5 minute, right? So those who remember the market maker models, alignment, and everything. So you got that 5 minute, and now you gotta just wait for the change in the state of delivery and closure about the the opening price of the 4-hour candle. So that would be the ideal thing that you can just focus on and then frame the trade there. You can see that it just opened up, created a low SMT, and then the change in the state of delivery, right? So this would be the change in the state of delivery, and then so it will be better if it just closed above this up close candles. So it just offered a fair value gap. You can see that this opening price has been respected now, as well as this breaker blocks, right? So you can just simply wait for the retracement, or maybe you can just buy here and then put your stop loss below this 4-hour low, which will be the protected low, right? So it shouldn't be going below this after creating the SMT, the stop hunt, and then the change in the state of delivery. So you can just buy here and then put your stops and then target the 1:2 here. So that's the ideal strategy here. You can actually take every single setups like this. Like if you just go to the charts daily, 4-hour, or maybe the 1 hour, the time frame aligned thing. So you can actually see that price is playing again and again that. So let me just go to the daily chart to show you the exact same thing. I got a lot of examples and then I got a lot of executions. So if you want a detailed video about this, I'll be ready to make. So let me know in the comments and make sure to follow me on Twitter, right? So that video thing. You can see that it created the daily fair value gap. Do you think that it doesn't happen again? Yes, it happens again. So to the external, the 4-hour open, low, high, close. This is a classic buy candle or classic sell candle model. So there's a lot of setups here you can actually focus on. So just trade the classic buy or sell candles. You will be the profitable trader and you have the actual edge, right? So that's the narrative, and then that's the complete trading model I gave you today. So now in this video. So hope you enjoyed this video. Let me know in the comments that you actually need the extended version.